Hi, my name is Emilia. How is your day? My day is quite busy right now. But do you know who is the most busy in the world? Business owner. Have you ever thought why still happen of bankruptcy and winding up in the business world even though they are non-stop working to improve their performance in companies? A long time ago, mostly owners only thinking about profit and losses of their company. They didn't try to adjustable about the financial system in their company. Let's see in this scenario.
Morning, boss.
Oh, morning. Come in. Have a
Thank
seat.
you, boss. Okay, boss. This is our financial report for this month.
Can you just read it for me? I'm quite busy.
Alright. Our financial report has been dated about branch A losses around $3,000.
Close it.
Okay. Product C doesn't give any profit.
Close it.
Okay. Our subsidiaries gain losses in this month.
Close it.
Okay. Our expenses client spend more to the employee.
Fire out.
Okay. Wait, what?
Now you get there. But didn't they think with their losses of $1,000, it could be actually rectified into profit of millions of dollars? How? Hello, this is 2021. Management accounting already exists to help us. With management accounting, we can calculate how long a single machine can operate for production, how many employees, and time of work that can be used for some of the product to be produced. What are the benefits and ideal opening or closing the branch? How efficient in the performance of the company? However, there is some challenges to be adapt in the management accounting. So now I will let my friends to explain on it.
During this pandemic, there is a wide fluctuation in currency exchange. So, an organization management accounting system must provide timely and accurate information to facilitate effect to control costs, to measure and improve productivity. Okay, next. The management accounting system also need to report accurate product costs so that the pricing decision and introduction to a new product can be made with the best possible information on the product resource demand. Okay, for the last, the organization also need to motivate and evaluate the performance of their manager. In this way, the management accounting will not fall into a problem.
The opportunity. The opportunity happened when the cost of collecting, processing, analyzing and reporting information have been decreased. Therefore, the opportunity arises when the demand for management accounting system arises. The information can be recorded in real time for analysis, operating performance when using digital computer. Automated recognition and tracking system can provide continuous status report on work in process. So, it shows that the system is accurately measured. Management performance become timely and more relevant in the organization. Today's designer of management accounting system can use sophisticated electronic technology to devise reporting and control systems that are more accurate, more timely and more effective than designed by their predecessors. In early decade, the procedures adopted is simplified and aggregate. The computing revolution of past 2 decades has reduced information collection and processing costs, that is, has removed virtually all barrier to the design and implementation of effective management accounting system.
Historians have demonstrated that accounting reports have been prepared for thousands of years. Bookkeeping records have been found engraved in stone tablets. 500 years ago, Fra-Pacioli described the basics for a well-functioning double-entry bookkeeping system, but the demand for management accounting information about transactions occurring within organization is a much more recent phenomenon. There were no levels of management, nor were there long-term salaried employees of the organization. In order to gain maximum efficiency from their capital investment, owners hired workers on a long-term basis. The yearly management accounting measures were simple. They focused on conversion costs and produced summary measures. The goal of these systems was to identify the cost for the intermediate and final products of the firm, and to provide a benchmark to measure the efficiency of the conversion process. By the middle of the 19th century, great advances in transportation and communication provided further opportunities for gain to large, hierarchical organizations. Improved transportation and communication combined with economies of scale also permitted the growth of large distribution enterprise. The management accounting measures were designed to motivate and evaluate the efficiency of internal processes. Further advances in the technology of management accounting systems were made in conjunction with the scientific management movement. The final developments in management accounting system occurred in the early decades of the 20th century to support the growth of multi-activity. Use of the ROI measure was expanded in the 1920s as the multi-divisional form of organization evolved in the DuPont and the newly reorganized General Motors Corporation. Return on investment provided an overall measure of the commercial success of each operating unit and of the entire organization. The ROI measure played a key role in permitting this internal market for managers and for capital to function.
In 1925, starting developed management accounting must account for labor, material, overhead, budget, forecast, and income and capital. In fact, when cost system become automated on digital computers, starting in the mid-1960s, the system designer basically automate the manual system they found in the factory. Innovation had been stopped in mid-1920s, but it's not taking a long time after companies DuPont and General Motors to be the model of many competitors for the next half century with forms of corporate organization. After a few processes and some hazards that disrupt the continuous of innovation, early 20th century managers did not have to yield the design of their cost accounting system to the financial accounting and auditor. Thus, the decision by manager to not invest in management accounting system separate from the already mandated by the demands for auditor.
Okay, in this article, there is a few questions, which is first, why the university based on research fall into a bad organization management, and why did they not play more effective and simulative to improve the art of management accounting system design? Okay, here are the answers. The academic focus to narrow on a simplified model of firm behavior, influenced strongly by economic one product and one production process model of one firm. The management accounting academic found title value in a cost allocation imposed on organization. In my opinion, a proper management accounting system should reveal whether an organization conduct its internal economic activity more effect than another organization, or market exchange might conduct the same activity. Further, the management accounting system should distinguish clearly between two types of information. First is strategic probability information, and second, process control information. Indeed, There must be one system to provide information about the strategic variable that create value for a organization. Secondly, management accounting system become less relevant and representative of organization operation. This is because many companies become dominated by senior executive. They believe that they could run the firm by the number. For the last, lacking knowledge also will be impact the project, especially in return on investment.
Accounting for caravans. In some respect, this is not a new phenomenon. If we return to the 15th century and the publication of the original accounting book by Fra Fazioli, we can ask what kind of event will occur that lead to a demand for accounting information. Merchants in Venice were trading goods with other countries. Consider a group of Venetian investors who acquire goods produced in North Italy and chartered an expedition to sell these goods in India. Once the goods were sold in India, the traders purchased tea, traveled back to Venice, and then sold the tea. At the end of the expeditions, the accountant subtract the cost of the caravan and the cost of acquiring the initial lot of merchandise from the revenues received from the sales of tea in Italy to compute a profit for the entire trip. A profit to be distributed among the investors in the venture. This was a worthwhile rule for accounting to compute the overall profitability of the venture and to distribute the net return earning among the initial investor. However, did the investor or the Venetian version of the SEC or FASB also ask the accountant to compute the expedition's profit during the third quarter of 1487 when the caravan was traversing the Persian desert en route to India? Probably not. Investors understood that allocating the total profit of expedition to period as short as 3 months was not a meaningful exercise. Yet it is not the value of preparing monthly income statement for many of today's organizations, not unlike an attempt to allocate the profit of a long venture to a very month within the venture. It is meaningless to allocate project profitability to short time period within the life of a project. Returning to our Venetian expedition, there are probably many measures of the caravans. For example, what distance did the provisions are left? What is the condition of the inventory being transported? Are the workers content or rebellious? There are many potential useful indicators of the caravan manager's performance during the third quarter of 1487. But quarterly profit is not one of them. Certainly, cash flow important, and we would want to know the pattern and structure of a company cash receipt and cash expenditures. But knowing source and the use of cash is very different from working hard every month and every quarter to produce complete income statement and balance sheet, amortization, capitalization, and many others accrue.
Management accounting system can and should be designed to support the operations and the strategy of the organization. The technology exists to implement systems radically different from those being used today. The innovative spirit of 100 years ago at the outset of the scientific management movement can be recaptured by creative managers and academic researchers who are committed to developing the new concepts for designing relevant management accounting systems.
Here, extra information about management accounting. The figures show the difference between management accounting versus financial accounting. Firstly, the management accounting mainly produced for internal uses. For example, manager and employees. But for the financial accounting, mainly produced for external, for example, shareholder, creditor. Second, purpose of information. Management accounting used for planning, controlling, and decision making. But for the financial accounting, it used for to record the financial performance in period and financial position at the end of the period. For the legal requirement, management accounting state that none, but for the financial accounting, limited companies must produce financial account, and we have some other different. So that's all from us.
Your way and the vibe is feeling strong, and what's small turn to a friendship turn to a bond, and that bond